Okay, good morning, everyone. It's wonderful to be here. Thank you for your attendance, and it's a great privilege to be here with this distinguished panel to discuss about cross-border M&A. I think, first of all, we'll start off with introductions. Start it with myself. So my name is Michael Butler. I'm originally from the UK. I've been in Japan for 11 years, and I've been doing M&A in Japan for 11 years. I work for a company called Shizen Energy, which maybe a lot of you won't be familiar with, but it's a renewable developer, domestic renewable developer with operations in Japan and Southeast Asia. Obviously, a little bit of a niche industry compared to some of you, but I know there are other energy-focused folks in the audience today. So I think today's conversation is more general. Maybe we won't get it too much bogged down in renewable energy or indeed in any industry in particular. So today's subject, cross-border deals picking up speed, and I think this is very relevant. When I first came to Japan, it was, I mean, we were having civil conversations, but there wasn't a lot of speed to be picking up at the time, either inbound or outbound. When I first joined in my previous company in the Big Four, we had kind of, if we were lucky, we had 1 or 2 deals. And now, speaking to my colleagues, you know, there's multiple deals across every kind of sector all the time. So things are definitely picking up, but there's obviously more to do. So I'll move on to Michael. Maybe you want to give a 30-second or 1 minute about yourself?
No worries. Thank you, Michael. My name is Michael Sonigo. I'm a partner at Pitcher Partners in Melbourne, Australia. We're a top 10 accounting network, and I'm working our M&A team. We do a lot of cross-border work, particularly between Japan and Australia, and have been pretty active in that 2-country M&A for about 10 years. So, great to be here.
Hi everyone, my name is Joe Fisher. I'm the head of the corporate team at Herbert Smith Freehills Kramer in Tokyo. So I'm an M&A lawyer, and my job is to help mainly Japanese companies when they're investing outside of Japan, a little bit international companies when they're coming into Japan. Been based in the country for 18 years and very much looking forward to today's discussion. Thank you.
Thank you. Hello, my name is John Price. I am Group General Manager in the Business Strategy Division and Legal Counsel at Nippon Express, a Japan-based global logistics provider. I've been in Japan for over 14 years and been with NX since the beginning of 2024. Prior to that, I worked at another Japanese corporate, and also I've worked in private practice in Japan and the US. And it's an honor to be here at the merger market panel. Thank you.
Good morning, everyone. And I echo John's comments around it's wonderful to be back in Tokyo, and Sedalia & Co. is extremely proud of our relationship with merge markets and looking forward to a day of insightful ideas and information. My name's Andrew Thane. I head up the shareholder advisory practice for Sedalia & Co. across APAC. Probably be important to note for people that aren't familiar with Sedalia & Co. We're a global firm, about 400 advisors in all the large financial hubs, so London, New York, Sydney, where I'm based. We're here in Tokyo, Hong Kong, Seoul as well. And in essence, we work on hundreds of M&A transactions year in, year out, supporting our clients and their advisors around tailored shareholder engagement and corporate governance advisory, really to assist with successful voting outcomes and deal completions. And we've been doing that for sort of 50 odd years, and really excited about the opportunities that we've got here in Japan and the Tokyo team, and looking forward to exploring that in more detail.
Hello, I'm Feng Wang. I'm a general manager of M&A team, global M&A team in Nissan. So I've been working for Nissan for 6 years. And today I'm really happy to be here to offer some perspective. I have a mixed background. I used to work for consulting, focusing more on the post-merger integration and operational due diligence. And then I worked a couple of years in the investment banking, focusing in M&A. And now I'm working in the in-house so-called corporate development and M&A team. So I'm happy to offer some perspective here and looking forward to the discussion.
Okay, thank you, everyone. So we have 3 or 4 kind of topics to go through today, and hopefully we'll get some time for some Q&A as well at the end. Although I think with these sessions, we often like to hear the sound of our own voices and we get carried away a little bit, but hopefully we'll have some time at the end. So I think in terms of cross-border deals, obviously there's the inbound element and the outbound element. Japan, obviously demographic challenges, but at the same time, lots of opportunities. Japanese companies very cash rich. Where do Japanese companies go? And then inbound, the opportunities around the depreciated yen and the flight to safety that we've seen in a very, disrupted and unstable world at the moment. I think there's lots of things to talk about. So the first topic would be what challenges and opportunities exist for Japanese outbound M&A under the current geopolitical and macroeconomic headwinds. And I'll start with Michael. And as we've got 2 Aussies on the panel and 1 Kiwi, there may be some Antipodean flavor in this. So let's see where we go.
Exactly. So, as I mentioned in the introduction, my area is transactions between Australia and Japan, so I will have an Australian bent on it. But I think, when we talk about opportunities for Japanese corporates, Australia is very much an opportunity. There's not the yen hasn't had as big an impact to the Australian dollar as against other currencies, which makes it affordable. But at the same time, last year, Japanese corporates made up close to 10% of deal activity in Australia. So it goes to show the significance of the relationship between the 2 countries. That's second largest to the US as an investor into Australia, and we're seeing that across many sectors. So I think despite all the challenges, and I know we've talked in the past couple of panels about the wars which are occurring in the world, the tension which is occurring in the world, there are some safe havens for business relationships, and I certainly think Australia and Japan is one of those, and an opportunity.
I'll give Australia that first round. New Zealand is just sheep, no business, so Australia wins that one. My apologies to anyone from New Zealand Trade and Enterprise that might be here today. I think maybe to broaden out on that, as Michael mentioned in his introduction, Japan has got a rather unique position in the world where we've got an aging and shrinking population, but these wonderful cash-rich companies. So over the long term, it must be the case that future growth for corporate Japan lies overseas. Now, in any given year, the geopolitics or the strength of the yen may influence deals on a year-to-year basis, but over the long term, the trend must be a strengthening of outbound investment by Japanese corporates. Australia, as much as it pains me to say it, is a wonderful country with a stable system of law and governance and is a great place to invest in. And we ourselves, Herbert Smith Freehills Kramer, see a huge amount of Japanese interest investing in Australia. But of course, there are many other markets in the world as well that Japan feels very comfortable. Southeast Asia is sort of a natural background with trade for hundreds of years, and so there are a lot of investments there. And then the Europe and the US offer very developed markets as well. I'm sure others have got experiences with that as well.
Yeah, I'd just add to that, and certainly New Zealand's a great market as well. We're very active in the work that we do when M&A arrives in New Zealand. But I think there's a lot to unpack there when you talk about geopolitical, macroeconomic and challenges. I think one of the challenges for Japanese outbound still remains around sort of post-merger integration. And look, we all know private equity's participation is at all-time highs, and I think their skills and expertise around that will certainly help, but there's key learnings. One of them in Australia was Asahi Group's purchase of Carlton and United Breweries, our big beer producer in Australia. So, but implementing sort of cultural workshops and dual language onboarding as part of that integrations, I think is a great lesson and one that can certainly other companies can embrace. I think geopolitical changing at a rapid rate, as everyone knows in this room, over the last 48 hours as well. I think presents an opportunity potentially for sort of, Japanese companies and some of the superior strengths that they have around local production, enhancing that, and from an acquirer's perspective, maybe as we reverse globalization, if that's a word, de-globalization, maybe that sort of assists in addressing some of the issues even around sort of global tariffs and wherever that may land. And I concur with FX and macroeconomics, but I think there's a real opportunity given kind of sluggish kind of local conditions that outbound will continue. If I look at it even from the deals that we've worked on in Australia, there's sectors that will continue to be strong. Consumer health around sort of Kieran's purchase of Blackmores, financials. We've just, recently with Nomura buying Macquarie Asset Management's European and US business, and also Tao into Challenger. And we actually worked on a renewable energies deal with J Power and their purchase of Genex Power. And we feel like that's a really strong pipeline that's still there in the first 4 months or 5 months of this year. I think that highlights that trend should continue. So excited about kind of the year ahead.
And I think the flip side for opportunities for Japanese corporates is also the way that Japanese corporates are viewed around the world, and that tends to be very positively. So I can say that corporate Japan is a welcome buyer wherever it goes. There's a great reputation there for buying companies and continuing to invest in them, not looking to shrink down workforces, leaving businesses largely quite independent to run themselves and do the things that made them attractive targets in the first place. So it's also not to be underestimated, the sort of softer side of how corporate Japan is perceived as a buyer. In a competitive auction, price is always going to be very important, but there are other intangible factors, and I think Japan's got a lot of those in their favour at the moment.
Right. And to follow up on Joe's point, I think as a domestic strategic investor, a domestic-based strategic investor, of course, conducting outbound M&A is always in itself a challenge and opportunity, regardless of changing headwinds. At NX, of course, for us to consider any outbound M&A opportunity, we look to our long-term goals set in our business plan 2028 and our 2037 vision, which outlines certain future revenue targets, which include global revenue targets and also overseas revenue targets. And so we see outbound M&A as a tool to achieve these targets. And as a strategic investor, we look to own and operate to these acquisitions to better serve our customers and to, of course, acquire a bigger customer base. And so to implement this global long-term strategy, we, of course, develop regional strategies. For example, currently we are looking to build a very strong presence in India, in the India logistics market. And so, in summary, we look to, as we do take into account changing economic trends and other factors in terms of developing our long-term strategy at our company, we, of course, are a strategic investor, and we are looking to have long-term goals, and so any short-term changing factors that we, of course, take account for, but they don't change our long-term growth strategy that we've developed.
Yeah, if I may add a little bit. different perspective. I very much agree to all the guests say what they said here. So of course, for Japanese corporation, I guess because of the demographic change, everything, the overseas market is definitely an attractive market for M&A. However, for M&A, we have to make a very clear long-term objective. Sometimes we made a transaction because we want to get access to the overseas market, right? This is basically what we are talking about. But at the same time, some of the objective is related to the technology. How can we enhance our current portfolio or create a new portfolio toward the existing market? So sometimes we see a lot of M&A investment acquiring overseas companies, then bring the technology back to Japan and serve the Japanese market. That could also work. So for all M&A overseas, we need to really think through what is the long-term strategy and objective here.
Okay, no, thank you for that. So it seems like we are ignoring the short-term noise, and we're just thinking that there's good long-term prospects here. I think that would be my view as well. Maybe we can move on to the next question, which is how can overseas acquirers overcome cultural barriers, regulatory hurdles, and fragmentation? This is obviously an ongoing perennial question, especially cultural and regulatory. Maybe, Joe, this is your area of expertise. You could lead up on this.
Sure. So I've got a few thoughts, and then obviously very keen to hear from my fellow panelists. I mean, I think the first point before I give you my ideas on how they're doing it, the most important thing is they are doing it. So inbound investment has been a strong trend in the last 2 or 3 years. I'm also conscious that the session immediately prior to this one was a Japan M&A update, and I suspect that some of the answer to this question of how people are getting comfortable lies in the type of structural reforms around corporate governance and investing in Japan that the government has been driving forward and that we're now seeing the fruits of. So as I explained at the start, I'm a foreign qualified lawyer. I mainly help Japanese companies going out, but I do sometimes help international companies going in, partnering up with one of the excellent Japanese law firms around to do so. And from my perspective, I guess my ideas on how these foreign acquirers are getting comfortable investing in Japan would be as follows. Starting with the basics, a lot of these professional investors, they must put their money somewhere, so they don't have a choice just to do nothing. And I think, as we've touched on already, in an increasingly troubled world, Japan is seen as a safe haven. And some people that had perhaps passed over Japan previously in the last few years have come back and taken another look, obviously Warren Buffett among them. To expand on that, Japan has got a trustworthy system of law and the courts. And even though we may not feel this living in Japan, I think Japan has stable politics. Of course, politics, anywhere is never completely stable, but if you look around the world, the view of outsiders would be that Japan has got a sensible system of politics that is not going to cause them massive amounts of stress in terms of assessing country risk. There's the structural reforms that we've just mentioned briefly, and I think the session earlier probably touched on. And I know that there's a session later today, Andrew would have some more thoughts on it, about shareholder activism, which I suspect is shareholder activism is something that you can really only get in sort of a healthy and dynamic corporate environment. We've talked about how the weak yen is possibly hurting outbound M&A. Well, obviously the reverse would be true for inbound M&A. There are people that are perhaps looking at the deal size and converting it into their home currency and thinking that things look quite good. And also we've touched on geopolitics in terms of Japan's alignment with the US and with other rich democracies means that it's a place that, as I've said, Japanese are welcome buyers of their businesses, but equally they would feel comfortable investing their money in Japan. They're not going to get criticised internally for making an investment into Japan. So then the question frames some sort of cultural barriers, regulatory hurdles, and fragmentation. I mean, to take the regulatory stuff first, yes, so as a foreign investor looking at doing a piece of M&A in Japan, you would need to look at whether you need to do a pre or post FDI filing with FFTA. You would need to do your merger filing analysis to see whether you would need to make a filing with the JFTC. And then depending on the specific sector of your deal, you may have some sector-specific approvals that are required. If you're going to change the directors around post-acquisition, you'll need to file that with the Legal Affairs Bureau. So of course there are regulatory processes which are applicable in Japan, but again I can say that these processes are not any more complicated in Japan than they are in other countries, and in fact I would say Japan would be on the sort of the good end of how predictable those systems are. You need to go through the processes, you need to build it into your deal timetables, you need advisors who can help you if you do need to make filings, but it shouldn't be of undue concern to a foreign acquirer as to whether their deal will get approved. So again, that's another positive, and I think they're getting comfortable on that. Cultural barriers and fragmentation, I mean, I'd be interested again to hear thoughts of my fellow panelists. The thing I would always say is that for an overseas acquirer, the best thing you can do is either find a local partner or to establish a presence in Japan and bring in people who are experienced in the market here to help guide you through the sort of the specific nuances of business in Japan. You know, either way, the point is the same. The more as a foreign acquirer you're prepared to commit into the country, the better those results are likely to be. So yeah, before I sort of open it up, I think the main point is that people are getting comfortable investing here. It's a strong trend, and it's borne out by some of the sessions we've got later today. So I see that we've got private equities move into the mid-market, the continued rise of private equity in Japan, and then specific opportunities in the healthcare sector. And I'd say that we wouldn't have those topics if it wasn't a robust and vibrant inbound market at the moment. So yeah, over to people for further thoughts.
Okay. Anyone else want to jump in on this?
Yeah, I think just from a sessions this afternoon, just as a side note, because we've talked about shareholder activism and behaviours of shareholders. My colleague who's here today, Danny Hunt, will, and I encourage everybody in the room and online to attend, but at 2:30 he's doing a case study around what we're seeing and the activity in Japan and more broadly across APAC. You know, what we do and what we do, words really do matter, and I think moving away from words such as hostile to unsolicited is a significant kind of a move and an event. I think coming back from an inbound point of view, I think there still continues to be a number of Japanese companies and assets that are undervalued, and I think that supports kind of inbound M&A growth moving forward. I think also, you know, it's important in regards to when overseas acquirers are coming in that they understand and take consideration around cultural norms, but they also look to communicate and know the narrative around the efficiencies that they bring as part of that transaction. There are a number of, I guess, undermanaged opportunities where we can maximise sort of profit, and I think some of the kind of Western style around a degree of kind of financial incentive for performance is something that overseas acquirers can come in and be targeting and communicating to the stakeholders, including employees of the target company, other stakeholders, investors, regulators, and looking at, you know, really understanding what the benefit is for the target company, but also more broadly as for Japan as a whole. I think that's where some of these opportunities, and we'll talk about later on today, some of the disruption and other things around activism which we're seeing.
Anyone else want to weigh in on this?
Happy to build on the cultural differences, and I think particularly when dealing with cross-border parties, what's taken for granted by a Japanese corporate actually could be something quite different around the rest of the world. And I know I'll come at it from an Australian perspective, but what we find is if your approval process hasn't been communicated, there's a risk of the deal succeeding. The approval process of a Japanese corporate is typically a lot more robust and time-consuming than of the Western world, be it an American or a UK buyer looking at Australia. It means that if we aren't aware when we're running our sale processes of your approval process, we can actually set a timeline that sees you unable to participate because you're unable to get the approval you need in issuing your non-binding indicative offer or even your final offer. And so, that is one of the things that we are very conscious of where we have Japanese corporates in our sale process, is making sure that we've allowed and designed a timetable that can cater to that robust, time-consuming approval process, which is probably taken for granted when you're just doing domestic M&A engagements.
Do you have any advice, Michael, for Japanese corporates who are looking to go out doing deals in Australia or maybe elsewhere? So, for example, when I was working in the Big Four, sometimes it would be a struggle to get our client into a process because the seller thinks they're going to be too slow, they're going to be too conservative, it's going to be a pain. And okay, that obviously, there's the other way of looking at it. There's the stability, there's going through the proper processes, but there's a different way of doing M&A to a certain extent. What would your advice be?
I think it's all communication.
Yeah.
Because my view is there's often reward for having a Japanese corporate in your sale process. They are a great buyer, culturally very aligned, protect the legacy of a business. They're about partnership and growth rather than takeover and kill or exiting people. So definitely worth the challenges associated with a timetable and the like, but it's about communication. It's about being clear on intent, so that the parties can work around that, because it will. I could probably do a deal with an American in half the time, but that's a very different outcome for the business, the shareholders who are exiting, their legacy. So it's about that communication and really understanding what's required to get approval and complete on a deal.
Yeah, I'd add to that, and being sort of heading up the Sedali practice, we always look at things through the lens of an investor. So if you want successful deal completion, it's also understanding the basics around who are your shareholders at a register level, but also what happens in regards to the changes in composition when a deal's announced as well, and what are the behaviours of your global funds and your passive funds and your active investors, and really breaking that out into different constituencies, so that you're targeting them with effective messaging and the like. So we know, and I've mentioned the session this afternoon, just how much a register even changes locally here on an inbound deal, where you could actually be sitting there with 20 to 30% of issued capital, sitting with event funds, sitting with arbitrage funds, where they might be holding that, not even in direct holdings, through swaps. And it's really important to get into the detail around that if you're going to have success. And as we see more and more deals, I think that will flow through, and there'll be a better understanding of the importance of doing that work.
Okay. Any further comments on this topic? Okay. We'll move on then, and I think next question will be John and Fun, your time to shine. So next question is, how are Japanese companies integrating domestic and overseas operations to establish global standard management systems and structures? Maybe John, if you want to.
Sure, thank you. At NX, we are currently focused on the post-merger integration of our Cargo Partners acquisition, which is an Austrian-based global freight forwarder, which we acquired in the beginning of 2024, and the post-merger integration of our acquisition of Siemens Hegeda, our German-based global contract logistics provider, which we acquired in February of this year. So at NX, we typically conducted post-merger integration at the local level with our regional companies. However, with the acquisition of Cargo Partner, our largest acquisition to date, we developed a dedicated team at our headquarters in Tokyo. The reason was because we wanted to more quickly create synergies between our between our NX regional companies and, of course, our our acquired business regional companies. And so the goal was, of course, was to do things such as establish more cross-selling, be able to sell, be able to utilize our network for our acquired businesses business and vice versa. We also, of course, moved over in some cases where we utilize third-party agents, move them over to NX in regions where that was applicable. And so, and also we also moved, trying to integrate functions and save and reduce cost in certain regions such as America, China, and Europe. And so with PMI, we again are we are a global company, and we integrate our companies based on our vision, based on our synergies that we want to achieve, and therefore we base our strategy around those. We all based on those achieving those objectives. So.
Then, thanks. Let me add a little bit perspective. So Nissan, as you know, is a global company, so we already have global presence. So lots of our operation outside Japan is built from scratch. It's greenfield. So when we talk about integration of the system and the structure, I think greenfield is always easy, right? To integrate, you hire the people, you establish the system. Exactly same as what you have in Japan. Maybe do some customization. So I think that, relatively speaking, is easier case. But I want to share a little bit perspective from my personal experience. As I mentioned, I used to work for a consulting arm of one of the big four, focusing on post-merger integration. What we constantly advising our client is that before the deal, you need to think about the integration, not after the deal. So that's why the clients hire a consulting firm trying to conduct some operational due diligence, understand where are the synergies, and identify the synergies, quantify the synergies, and establish a joint team, even prior to the deal, to track the synergy realization. So people always think, if I want to grow my business, I want to create new revenue or cut in the cost, I can do some M&A. I will achieve a lot of synergies. But at the end of the day, if you don't have a specific team to follow that, identify that, and track that, then you will not make sure, it's for sure that this synergy will not be realized. And actually, I think at that time, we have some statistics. So like 80 or 90% of the deal, the synergies are not fully realized. So that's why I think having this synergy analysis prior to the deal is very important. Focusing on the sales channel, the cross-selling opportunities, focusing on the sharing of the R&D expenses, cost reduction, manufacturing, purchasing. These are all quite fundamental sources of synergies. And in terms of integration, I think we need to focus on the basic stuff like system, like financial reporting, these type of things. I think we can also hire expert helping us in this post-merger integration. But we also need to balance what is the autonomy we want to give to the target company or the overseas operation, right? We don't want to control everything, so they lose the motivation, and at the end of the day, they cannot deliver the results. So we need to achieve a dedicated balance between the autonomy, between the and the integration. So that's my feeling or experience from my past career. Yes.
Anyone else want to weigh in on this topic? Okay, maybe a question from myself then for both of you gentlemen is, I think in the stereotypical kind of traditional way that we, often in terms of PMI that we thought that Japanese companies kind of operated was that they were reasonably kind of heavy-handed. They would make sure that there was a Japanese person on top. They would make sure there was a significant amount of reporting back to headquarters, and they would try to make it over time very much like the domestic operations. Is that something, you talked about a balanced approach, Fang. Is that something that you've seen changed over time?
My personal view is that the from headquarter perspective, we need to make sure tracking the synergies. That's the priority we should focus on. We don't have to manage everything at the target company or overseas company, but we need to track the key KPI of the target company so that make sure that all the synergies are delivered. Then we still need to make sure the target company has autonomy to make decision by themselves, because some decision it's better to be made at the regional or the local level rather than everything going back to the headquarters. It will take a lot of time, especially you mentioned about the culture in Japan, right? Then it doesn't work. So we need to make sure that some of the decisions can continue to be made at the target or regional level. That's my feedback.
Okay, so it's less about structure and more about making sure that the synergies are achieved, the KPIs are achieved.
Yes.
Yeah. I think in my experience, where it's successful is when that person coming in is more in a supporting and reporting role. So rather than coming in to run the business, it's being left to the local management. There is a requirement to report fairly quickly at an end-of-month basis. So having that embedded person assist with that, but then also that person being responsible for collaboration between other business units to identify synergies and opportunities where different business units and subsidiaries can work together for a better outcome, whether that's saving costs, new revenue, your typical synergies.
Yes. So again, as the other panel speakers have mentioned, we do focus on achieving, we call, I'll say it again, word again, synergies, but achieving our goals that we plan prior to closing, that we want to implement post-closing. So again, most of all our conduct and all our organization is focused on running the business and establishing these synergies. So of course we have a governance structure and a reporting structure, like as needed, of course, and we need to establish that. And so we of course, but the focus is again achieving our goals. Okay. With the acquisition.
Okay, makes sense. So early planning and making sure that the right synergies are there at the outset, and then going on to try and achieve them. Yeah. Okay. Maybe we'll move on to the next question. So I think our first question was kind of where the market is now. I think this question is more about, where do we go from here? So yeah, this is the final question. In an era of unprecedented disruption, which we've been talking about as being a theme through this panel and also through the panels that I heard this morning as well, what particular changes will drive Japanese M&A activities in the kind of short to mid-term future? Obviously with a cross-border element to it. And I don't know, Feng, if you wanted to lead off on this.
Yeah, sure. So in my perspective, we mentioned about unprecedented disruption, right? Many factors we talk about here. But based on my previous M&A experience, I think disruption is always there. You have different disruption, like Hirano-san this morning talking about 5 black swans, right? Even if you have done everything right, due diligence, reps and warranty, insurance, everything covered in M&A deal, you execute the deal perfectly, but there's always unexpected factors outside of your control, and that factors or multiple factors add together will decide whether you have a successful M&A or not. So in my point of view, M&A should always focusing on the long-term objective rather than short-term. So I have been asked to support some of the deal within my current company or previous company because some business team came to me and say, hey, there's a policy change in a specific region. For example, we need to get more EV credits, or we need to acquire this company in order to make minority investment in order to able to gain positive credits, or to mitigate the risk from the litigation from the policy perspective. But normally these type of thing will not work because, as you know, the policy change every day. 5 years ago, 3 years ago, you have the Biden administration pushing the EV, IRA, right? Everyone is striving for $7,500 per vehicle in the U.S. This is a pretty big, thing. Many people are investing, made a lot of investment today. But today, the IRR is being challenged in the new administration, and there has been, more scrutiny in terms of foreign investment. So my personal view is it's difficult to follow closely about the policy that is changing all the time in order to make an investment decision. Investment decision should always is long time focused, while we can have more flexible, agile operation at operation level to adapt, to make change in order to fit the current change in the outside factors, those factors. So long-term, how do we do the long-term M&A? I think when we talk about M&A, it's not just big deals like Nippon Steel and U.S. Steel, right? This type of deal is not happening every year or all the time. So there are many different forms of M&A, including, for example, investment, minority investment, including joint venture, including putting some seeds in some startup companies, right? I see many Japanese companies, they have excess cash, they are establishing corporate venture capital. The benefit for corporate venture capital is separated from the corporate decision governance, so it can make decision quickly in order to diversifying their risk. They're putting a little bit small money into a couple of small startup companies, and 1 out of 10 or 2 out of 10 may work 5 years or 10 years down the road. Then you have your strategic benefit. So that's one thing, but you have to prepare that maybe 8 or 80% of your investment will fail, which as a general M&A department, we cannot afford that, right? That's one. Then second is if the business is, you are trying to get some mature business, right? You want to see the immediate return or synergies, right? You look at the target company, but it's better together with the business team, finance team, M&A team together. Sometimes I've seen that the business team moves too fast, or R&D team. They look at the target company, they may already have some joint development. They like the technology, and they come to me, hey, we want to invest in this company, okay? But they already advanced in the talk, joint development, potential joint venture, investment, etc., etc. Then when I came to see the company itself, the valuation, the company, they already have very high appetite of the valuation, right? Because they say, oh, because we think, we are bringing a lot of value to your company, so this is the valuation. Okay, this is the valuation from my last round and non-negotiable. So it makes M&A investment very difficult. And then sometimes I look at the company, okay, everything is good, negotiating well, deal structure is good. Then I look at the balance sheet and the cash flow of the company. The company is almost has a liquidity problem in the next 12 months without our investment. So that totally changes the story. So if we are trying to get some synergies or a return from investment into a mature company or half mature company, we need to make sure the M&A work closely with the business team if there's any intention to do some investment. And another, I think, thing is about joint venture. So sometimes I've seen people just want to say, hey, let's do a joint venture because we want to get market access into this particular market, and this partner is working very well. They already established presence. They can offer a lot of value. Let's do a joint venture. But the thing is, I have worked on a lot of establishment joint venture. At the same time, I worked on a lot of dissolving of the joint venture because things doesn't work as expected. So my personal feeling is that it won't hurt if you date for a couple of months or a couple of years before you start talking about marriage, right? So it's better to do some commercial level of deal, joint development. You can also have exclusivity. Even it's dating, you can still do exclusivity, right? And then you can see whether this works or not. Then you talk about the joint venture, marriage, or potential acquisition. So that's some perspective I want to share. Yeah. Okay.
I'll just sort of pivot slightly, and again with the sort of global investor cap on from Sedali's perspective, and should note that we don't work with activists. in the market. We actually really understand their behaviours and what they're going to do and what their drivers are, and we can work around activist response, and we do that in this market with our financial advisor partners. But I think from a disruption perspective, we're going to continue to see activism. As I said before, words matter, and we're going to see more unsolicited bids in this market with the METI guidelines. It's a fact that activist participation in this market's gone tenfold in the last 12 months. Not to steal my colleague's thunder, but I think we identified there's 79 odd activists currently here. So we're going to continue to see activists drive for divestment of non-core assets. They're going to continue to want companies to pursue sort of strategic acquisitions, both kind of offshore and inbound. And that's certainly something from a disruptive perspective that the market here needs to understand and embrace. And I, encouraged by moving away from hostile and sort of as part of those METI guidelines, it's going to be kind of a new frontier for directors as well to consider. So I think certainly disruption activism is one part of it.
John, would you like to?
Yes. Again, kind of following up my previous answers in terms of, again, we have long-term growth objectives. So we have long-term growth objectives, and so despite any disruption, we are focused on achieving our long-term goals. So again, like we talk about noise, we focus on long-term goals, so any short-term trends, changes, we of course take very serious, and if they affect our business, we are, of course, are concerned so that we can better provide services to our customers, of course. But in terms of long-term growth, we focus on long-term goals, and so any short-term trends or other factors that might change, we of course take very serious, but we look toward long-term growth.
Okay, Joel?
Yeah, I think from a legal perspective, there's always ebbs and flows. So one of the things I've been talking with clients about in the last 48 hours is, you now have solutions to sellers not wanting to stand behind representations and warranties. So main solution being warranty indemnity insurance, escrow is an option as well. So that's an example of, that's making M&A simpler now. That's a solution to a problem. But then new problems will arise. I mean, we've seen governments all over the world are more interested in M&A transactions and are basically making sure that they get visibility over more and more M&A transactions. So that's through merger control, that's through FDI analysis, and then other, sometimes sector specific as well. So I think that's one of the new challenges that we're dealing with from a legal perspective with M&A is, you've now got a longer period of time typically between signing the deal and being able to complete the deal. Very unusual these days not to have some regulatory filings which need to be made. But again, that's sort of not, that doesn't stop deals being done. It just means that you need to factor that into your timetable, you need to plan around it, and you need to be putting together the information required so that you can get those approvals. So there's always something sort of new coming up, but people always find a way to get around it or to get through it, so that they can continue to do the deals to achieve the objectives that John and Feng have been talking about.
Michael?
Probably only to add on something that Feng said. I actually think I've just forgotten it, so maybe I don't have anything to say. I'll come back to you.
Okay, so I think the interesting thing about this conversation has been we're kind of saying ignore the disruption, which is an interesting take on things given the chaos we see around us on a daily basis. But basically, I agree. I think the market, you need to stay nimble. The market is kind of fragmenting and changing, and we're seeing a lot more nuanced kind of deals. We mentioned JVs, but there's so many different kind of deals being done. But yeah, at the same time, people want to do deals, but they're being more cautious. I mean, Joe was just mentioning about, reps and warranties and escrow, and I think there's so much uncertainty. People want to do deals, but they want to do them on their terms in a risk-averse way. So it's about staying nimble, but yeah, also staying true to your long-term strategy and making sure that you do ignore, well, you don't ignore, but you take into account the disruption and that you make sure that you still achieve your goals despite what's going on around you. Michael, are you okay?
Yeah, and I've remembered now. It was actually picking up on 2 points. One was that cultural and the date before you get married.
Yeah.
And I think it's something that I do think Japanese corporates are in a unique position on, is because of that cultural, global cultural acceptance of trust and value of relationship. There is that ability to construct deals over a longer time frame in a more informal manner than perhaps other corporates from other parts of the world, where that same level of trust, respect, and honour is not taken into consideration between parties. So I do think that's a unique opportunity that Japanese corporates have looking outside into the global market at the moment.
Okay, understood. So I think we have a few minutes left, so I'd like to open up the floor to questions, if there are any. I'm not sure what the mechanism is to do that, but please go ahead. Okay.
Thank you. Thank you very much. I just want to ask a question tied to that last point about
It'd be great if you could identify yourself and say who
Hi.
you are.
Yes. Hi, my name is Fatim. I work for FGS Global, which is a communications advisory working on cross-border deals. We talked about the opportunities and like the cultural benefits of outbound M&A, but what hurdles, the cultural hurdles, are you seeing maybe trickle down into legal issues later on or post-integration that are kind of unique to this market?
I think one of the things that has been mentioned already, and I'm a little bit wary of sticking to it entirely because it can be somewhat of a cliche, but corporate Japan probably does take longer on the whole to do an M&A transaction. So I think it was Michael that was talking about, in terms of getting the deal done in a very competitive environment, that's an element of the way that corporate Japan does M&A that needs to be carefully considered and communicated to the other side up front so that they understand the timelines immediately and they understand that it's not the acquirer being slow, it's just the way that their processes work. And frankly, we don't see Japanese companies missing out too much at the moment because of that. But I think in a very hot M&A market, that can be a challenge for Japanese corporates.
I think M&A deals in general have slowed down, which is probably to the advantage of Japanese companies.
100%, yep.
Michael, I think...
And again, I think it can be, like we were talking about W&I insurance, it can be mitigated through, having advisors who know the nuances between Australia and, not Australia, Japan and the other market that can help you guide you through that. I think one of the opportunities is, and I've seen it's relatively rare in my experience, but that's delegated authority can also enable decision making to be made a little more quickly within the confines of an approval process.
Yeah, I'd just add as well, I think, and it was mentioned before from a cultural perspective, just really important to kind of get the balance right. So taking the best of Japan, whether it's around production technology and production quality, and then integrating that with the other markets, norms and best practice as well. I think that goes a long way, and there's a number of examples of where that's now improving. And I mentioned before, I think some experts in the room around private equity and that increase, I think will also help when it comes to integration and addressing some of those cultural challenges.
Okay. Anyone else want to weigh in on this one? Or maybe we can move to the next one. So I think there was a lady down here who'd like to ask a question.
Thank you for your insights. Raiha from Merger Market. Just wanted to hear a little bit about outbound deals. I think it's been a common theme since earlier this morning that, it's business as usual. Outbound deals are happening despite certain geopolitical risks or, factors. But I'm curious to know whether there must have been some sort of short-term remedies or kind of aspects that you have become more conscious of in the shorter term when weighing in these kind of risks. So I'm curious to know from the strategic panelists, NX, Nissan, even Shizen Energy, what are certain factors that you have grown slightly more conscious of in light of some of these more recent geopolitical events, be it the US tariff changes or Iran-Israel conflict, or if any?
Anyone immediately want to pick up on that? I can talk a little bit about my industry. Yeah. So I think in terms of renewable energy, it's a very interconnected supply chain. So a lot of what we do and what we need comes from China. At the same time, we deal, as Shizen Energy, we deal with a lot of kind of low to middle income countries in Southeast Asia. We also have a business in Brazil, but we also are in Australia and the US as well. So there's a big mix. Tariffs is a key issue for us. How do you get around the supply chain issues when you want to buy something in China and install it in the US or even in Japan? It becomes an issue. So I would say, and reflecting back what other people said, that our long-term strategy hasn't changed, but we do have to think creatively about solutions, and we do have to think about, do we take a pause on this market and maybe focus on that market for the time being until things clear up? I think that would be one thing that's obviously been an issue for us. I don't know, John or Feng, if you want to add about
I feel
your
like we should be a bit more negative, but I'm positive. But look, I think it's a fantastic time to be operating in APAC. I think that from an outbound perspective, and we've talked about sort of Australia and Michael's points around, I think it was from a foreign direct investment, it was the 11th year of growth, and it was a record year last year into Australia. So I think the ties between outbound Japan and Australia couldn't be stronger. That's not ignoring the kind of the mess that's happening in a geopolitical sense, but from even first start of 5 months at the start of this year, it's very robust, it's very strong. So I think, and I hope, and I think everyone in this room hopes that as well, that continues on.
There'll always be structural solutions as well. So if you're looking at acquiring a business and you're worried about the external environment, I mean, you can put things like a material adverse effect CP in there. So if something happens in your period while you're getting your regulatory filings that has a detrimental effect on that specific business, it may allow you a chance to walk away from the acquisition. You could, of course, reprice the business and put in something like an earn-out so that it gives you a smaller fixed value that you're paying up front, and then you're only paying the extra based on the profits of the business going forward. So for deals which people are keen to do, there's always structural ways to allocate that risk between the parties. Uncertainty probably does have some chilling effect on some deals just not getting done in the first place, but where there's a will to do it, there's always a solution.
Yeah, to follow up on what Joe just said, again, in terms of earnouts, that's certainly one way to manage potential risk. For example, in our cargo partner acquisition, we have a earnout as part of the acquisition package. So of course that is determined on in terms of performance, in terms of how much potential earnouts that would be allocated for that acquisition. But again, perhaps different than some of the other people on this panel, NX is a service. We are a service provider, and so we, of course, have to follow what we are supporting our customers. And so as things change in the market, we, of course, have to adapt to better serve our customers and to grow our customer base. So we are always keeping apprised of current trends, of course, and adapting as needed to support our customers.
At Nissan, whenever we evaluate each investment or partnership opportunities, of course we need to look at the geopolitical factors, right? This has always been one of our decision factor. Given the situation today, we're not creating a new factor or new criteria to evaluate. It's just maybe this criteria, the weight of this criteria is increased in our final decision formula. So obviously, we are a global company, but we have different markets, right? Which doesn't work in, the thing doesn't work in the US market may work somewhere else. So to that end, we need to kind of mitigate the risk by diversifying the application of the technology into different markets.
Okay, thank you. Thank you all. I think we're out of time. So just wanted to say thank you once again to Emerging Market for inviting us all. It's been a privilege to be here. I hope you found that an interesting and illuminating conversation about cross-border M&A from the unique perspectives of our panelists. So I'd just like to say thank you to Michael, Joe, John, Andrew, and Fun for your insights. And thank you everyone for listening. And I think we are at an end. Thank you, everyone.
Thank you.